Hey everyone, Darian Veal, Exit Realty, back here at our Southside office here at 7300 South Cottage Grove. Today I am with another lender, Karen Olenski with First Community Mortgage. Again, trying to show you guys as buyers, trying to show you the money. Today we will be discussing renovation loans. Renovation loans, given the current market, could be a pretty valuable tool. I'm sure you know as well as I do, there's just a shortage of inventory in the market. Most buyers, they want to go in, they want a house completely renovated. You just want to move in, all the bells and whistles, and that's fine. But unfortunately, that's where we are seeing the low inventory. There's just not enough houses on the market, not enough finished houses on the market right now for buyers. And so that's where a renovation loan could definitely prove useful. And so I'm going to stop blabbering away, and I'm going to let Karen here take it away and explain to you guys renovation loans, how renovation loans work, and some of the different products that First Community Mortgage offers.
Good morning, Darian. Nice to be here. Very honored to speak with you about our whole slew of renovation products. And yes, this is a very interesting market. It's kind of like the same market we saw during COVID, where there were no very limited home supply. Renovation mortgages are great. They're a good solution at this time. What's available is actually properties that you could buy, borrow the money to renovate it all in one 30-year term loan, one interest rate. You can carry it through the whole 30 years. You don't have to get out of it if you don't want to. But it's it's affordable way to borrow the money to rehab, because it's amortized over 30 years instead of just borrowing from hard money lenders or whatever that have a higher interest rate. This is much more affordable to pay off. But we have First Community Mortgage has a slew of renovation products. We have the FHA 203K, which a lot of brokers and buyers do know about. It's a fabulous product. It's for a 1 to 4 unit building. It is 3.5% down, and that's for the combination of the purchase price plus the renovation dollars. That's what your 3.5% down comes off of.
And so, and not to cut you off, but just so that our viewers are aware of what you mean when you say that. So let's say if you are issued a pre-approval for $350,000, you could in theory buy a property that's $200,000, and then you could use the additional $150,000 to renovate the property, and that's all in one loan product.
Correct.
Okay.
That's a good way to look at it. So when you're showing your clients properties, they go in and they think, okay, well, this one's, like you said, it's a lower priced property, but it's going to take so much more money to rehab it, and that's part of their pre-approval. So that's what I do. I figure that in, and when I pre-approve people, I make sure that they go to the maximum of what they could afford, and I make sure it's run through automated underwriting too at this point, so you don't come up with any problems at the last minute.
Gotcha.
So that's the FHA 203K. It's got a little bit more paperwork, but I handle the paperwork. It's not a problem for me to get these done because we do a lot of them, and it does require a HUD consultant that will visit the property and write up a report on everything that would need to be done per like HUD standards. So that's great, because you're gonna want to fix those things anyway, if it's electrical or plumbing or whatever.
And by HUD standards, you mean if there are any issues with plumbing, electrical, things that may not necessarily be up to code, or things that might be safety issues?
Correct. Health and safety issues are number one. Of course, that's, you don't want to buy a property where you're not taking care of those things. You want to address them. So that's going to be corrected with the renovation.
Gotcha. And so just so I'm clear, and so our viewers are clear, with a 203K loan, so if I want to renovate my kitchen, fantastic. I want to renovate my bathroom, fantastic. Are there things that I cannot do with a 203K loan? Can I have an underground pool put in my backyard?
No,
no pool?
No, you cannot. Sorry.
Okay.
Hot tubs outside, not so much. No. You can actually work on the garage, and you could do landscaping with it. So that's kind of great. But yeah, if you don't like the kitchen, the bath, you want to finish the basement, you want a dormer, you want to do something to the attic space, that's the way to do it. But sorry,
Yeah,
there are
no.
there
There are limits.
luxury,
Luxury
limitations.
limits. Gotcha.
Exactly.
Gotcha. So no bowling alleys in the basement or anything like that. Okay.
Yeah, well,
Gotcha.
you could do that after you close.
Gotcha. Okay. Gotcha. Okay.
Yeah.
Sorry.
So that's FHA, and I love it because you can, again, 3.5% down is really great. The next product we have for owner occupiers is you could actually buy a 1 to 4 unit building with 5% down as an owner occupier.
Okay.
So the good thing about that is with these multi-unit buildings, you would live in one unit, you'd rent out the others, hopefully the rent from the others cover your mortgage plus.
Mm-hmm.
And if I were to do my whole strategy over again, I would be buying a 1 to 4 unit building that I would live in and then just have somebody else pay my mortgage. But I do this for other people, and that's good enough.
Gotcha.
But it's 5% down too, so that's
Okay.
that's pretty good. As an investor, though, if you're coming in and wanting to purchase, it's 25% down. But for investors, they're pretty much done with their projects after maybe a year or so.
Mm-hmm.
They want to flip it. That's fine. And 25% down is not really so hard for an investor to do. But that is something that we have. We have a VA renovation loan, which is 100% financing. So a veteran can go in and buy and borrow the money to rehab up to $70,000 right now. VA has for 0% down.
And I don't want to, and not to cut you off.
Oh, no.
And we don't want to get too much into VA loans, but can you just, again, for our viewers, who are the people that would qualify for a VA loan? So obviously active military.
Active military. If they are deceased, their spouses. There's a lot. Active military, retired military. Yeah.
Mm-hmm.
Coast Guard, National Guard, all those folks qualify. As a matter of fact, once a month I do a VA home buying workshop up at a Tatler Post up on Montrose and Western Avenue, so everybody's invited, even if they're not a veteran. 6:30. It's the last Wednesday of every month, and it's a really good benefit to everybody, veterans and non-veterans alike.
There you go. So if you're a veteran,
Please come.
There you go. You just got the information. Okay. Sorry, go on.
No. So let's see. The other renovation products, we have the 2 to 4 unit fix or flip that we talked about. We also have, if you're just buying a single family home, it's a 5% down. Again, it's off the purchase price and renovation. That is for single families. FHA, single family, 3.5% down. Then we have we have the jumbo renovation loan, which goes up to $2 million.
Up to $2 million.
Yes.
Can you explain that a little bit?
Sure. It is, again, these are loan products for up to 4 units because it's conventional lending basically. Mm-hmm. Anything above that is considered commercial. So if you happen to find a property, maybe perhaps you want to build a property, you can go up to $2 million.
Gotcha.
Purchase of the lot and the build all together. You can go up to that amount.
And now, so let's circle back to the 203K loan, the FHA 203K. I think that's kind of the more popular one, maybe the one that people kind of hear about the most, and probably for the purposes of our viewers in this video, probably the one that I'm gathering most people will be interested in to qualify for. So is there a minimum amount for 203K, a minimum repair amount, I guess?
You know what? There is, I'm glad you asked that. There is a limited, there's a 203K limited, and those are for repairs under 40,000.
Okay.
That's really nice because for a project like that, you don't need a HUD consultant.
Okay.
You would just have your contractor come in, do a bid on the whole, repair, whatever it is that you want to do, whatever is mandatory, whatever is desired, you would get that bid from your GC, and it's a lot more efficient. You don't have to go through a longer process. Yeah. So, but that's for limited repair.
So $40,000 or less.
Mm-hmm.
So that would be an example. I buy a place, the place is fantastic, but let's say the bathroom's outdated, or using my example from the bathrooms and kitchen. So maybe I want to maybe the basement is finished, but maybe I want to add a bathroom, in the basement.
Perfect. That is
Gotcha.
perfect.
Gotcha.
It's very efficient. I like it.
Gotcha. So 2 or 3K loans, renovation loans, don't necessarily have to be where you go in and completely renovate the entire house. You can be in love with certain parts of the house, but
Right.
maybe you just want to fix. Maybe you want to fix. Maybe the roof needs to be. Maybe the roof needs to be repaired.
That's exactly right. That's exactly right. Lots of people do that. They just want this little bit of money, and it's really easy. Like I said, to take that renovation amount and amortize it over 30 years. It's not a big hit out of your monthly payment at all.
Gotcha. Okay.
Good question.
All right. That sounds good. And then you mentioned that it can also be used for 2 to 4 unit properties also.
Yes.
Gotcha. And so you mentioned 2 to 4 owner occupy. Is there a difference in the lending? So let's say if I'm buying a 3-unit building, but I don't plan to owner occupy, is there a difference in the renovation loan or the terms in the renovation loan?
If you're not going to owner occupy, of course, then FHA is only for owner occupiers, correct?
Of course. Yep.
So then, if you're not going to owner occupy, it would be a 25% down.
Oh, you did mention that. Okay. Yep.
So again, that would be for people that want to flip it. If they want to live there in one of those units, then they get the benefit of just doing the
FHA 12.
Mhm.
Gotcha.
They could do that, or they could do the owner occupied 5% down for conventional.
Oh, 5% down for conventional.
Yes.
Right. Gotcha.
Yes.
Gotcha. Okay.
I went to an investment meetup last night, again once a month, and I like to go to these things because I like to hear people's thoughts on how it's all about people house hacking, and I love to hear their ideas and what their preconceived notions are, how they're going to finance it and whatnot. And one of the speakers said, only in Chicago, this 5% down for a conventional 2 to 4 unit is amazing. Chicago is very unique in that it has a lot of 2 flats, 3 flats, and 4 flats.
Yep.
A lot of big metropolitan cities don't have that, and I never really thought about it that way.
Yep. I hear that a lot.
Really?
I hear that. That's pretty unique about Chicago, is that there's a ton of multi-units.
And it's great. It's such a great opportunity to, you're getting your own equity. Like you had said in the very beginning, you could find something that's already fixed up. Great. You pay top dollar for it, and it's going to be very competitive out there right now. But you can find these 2 to 4 unit properties that are really priced low, and then you create that equity when you rehab it.
Right, and that's a different conversation, but example of creating equity. Using my example from before, $350,000 pre-approval, you buy a place for $250,000, you put $100,000 worth of renovation in it, but now your ARV or after repair value, let's say after repairs, it's actually worth $375,000, and so now you are sitting on $25,000 worth of equity.
Yes.
In your house before you have even really stepped foot in it.
That's correct.
And that's a beautiful thing.
That is a beautiful thing, and it's great that you brought that up, because the way we know that these loans are going to work is we will get the bid from the contractor, and we will send that bid to the appraiser. Appraiser is an independent appraiser. They're not affiliated with us at all. They will go out there and they will look at that budget, and they'll pull comps in the neighborhood, and they will tell you what that value will be after the improvements. And that's how you know it's going to work.
Absolutely. And myself as a realtor, before it even gets to that step, if you're coming to me saying, hey, Darian, I'm thinking about buying this place, we want to do a renovation loan, we're thinking it may need this amount of money, I'm running comps before it even gets to that point to say, hey, think that's a good buy at this price, or no, at this purchase price you're gonna be underwater. Like the repairs doesn't make sense. It doesn't make sense to buy it at this purchase price with the amount of repairs that you need.
I mean, that's your value right there. Is you can tell buyers, okay, you can give them the information, they can make their own minds up, but you're going to provide the numbers to the whole game, and it will be backed up by that appraiser. So that's what's exciting. That's why I really like what I do. People are going to be making money off of these renos, and if they're not going to be selling it, but they know that this is an investment.
Yep.
And that's what's important.
Yep, absolutely. Is there anything that, again, going back to the 203K, are there any repairs that cannot be done under 203K? Because I think I've heard maybe like foundation issues and things like that. That's kind of a red flag.
Well, again, good question. Very good question, because this does come up. We'll have a bid come in, and then somebody will say, oh, wait a minute, what about the crack? We need to know about that crack, and then if it's not something a GC under their
Scope of
that they can manage, we will have a structural engineer come in and weigh in on what's going on there. And I've done that on quite a few projects lately, where you have to know, and it's important to know this going in for the buyer, to know, okay, well, that structural repair is going to cost so much money. But it's so important to know that going in, because you don't want to do a repair in a shoddy manner, or something's going to happen down the road. You want to fix it so it's solid, and it will be flagged. We will get that person in there, and I like to do it up front. You do a really good inspection. You don't even need to do an inspection on a 203K, because you're going to be hiring a HUD consultant.
anyway. Yep.
Yes, and the HUD consultant is going to be doing that inspection report, and they're going to be very, very thorough about it.
Yep.
They will look at everything. They'll look at every beam, every wall, every little crack in the foundation, whatever, and call it out. So you'll know then what the dollar amount will be to repair that.
Yeah, calling in a structural engineer is not cheap at all. Like, that's something that could potentially, structural issues tend to be a little bit on the expensive side, so I've heard.
Well, it can be, and that was what happened on the one of my projects down here on St. Lawrence. The great thing is the structural engineer came in. It cost maybe $700 for him to inspect it, write his report, and then hand that off to the GC. So then we know how to proceed with the repair. It can be costly, but really, it's so fundamental to the integrity of the building that you do want to just get it done if this is the building that's going to really appreciate.
Yeah, I mean, right. I'm somewhat joking when I say cost, but it's actually ultimately it's a cost saving measure, because if you go in, you do all these repairs only to have something unforeseen, due to structural issues happen later on. That's going to cost you a lot more money in the long run than it will up front. So,
yes.
Yeah.
And some buildings really are worth, that investment.
Mm-hmm. Yeah, absolutely.
You see them, you're like, oh my gosh, these are gold mine, undiscovered gold mines that, once you do repair them, you are going to be sitting on a nice investment.
Gotcha. Okay. All right, cool. I don't think I have any more questions. Anything else that you would like to discuss?
One thing that just popped into my mind when you were talking about the structural engineer is, with all of the bids that do come in, we require, on top of the bid amount, there will be a 10% contingency added to the bid, and that will be, when you say anything unforeseen, that's going to be important, because when you start opening walls, you're not going to know exactly what's there. And a GC will not, they have it pretty structured, every dollar that goes into their bid, what it's for. So that's there to protect the borrower. And if they end up not using that 10%, it goes to their principal payment. So that's good.
Gotcha. Yeah, that contingency
it's everything.
It's everything. As a person who has done a couple of renovation projects myself,
okay.
Yeah, I know that contingency is.
Yes.
Yeah, you definitely want to put that in the budget. And so the fact that you kind of mandate that it's part of the budget, is again a cost saving measure.
Absolutely.
Because again, you start opening walls and opening ceilings and things like that, and you have no idea.
Right.
You have no idea what you're going to find.
Right.
So yeah.
And at the end of the day, too, if you end up not using that, you could also use that 10% contingency to upgrade your finishes.
Yeah.
You get better cabinets, nice counter, whatever it is, just higher end things that you could, use that money towards. So it's really beneficial.
Right. Or to your point, it can just go to your city and go back to your principal.
Absolutely.
Yeah. Okay.
It's a win-win.
Okay, cool. Well, thank you so much, Karen,
Thanks
for
for
sitting
having
down
me.
with me today. Can you tell everyone how they can reach you?
My name is Karen Olenski. I work with First Community Mortgage, and you could always call me at 773-590-0249.
Right, and I will make sure that all of her information and the flyers and everything that she has here today, all that will be in the link underneath this video.
Great.
Okay.
Thank
All
you.
right. Thank you so much.
Nice
All
talking
right.
to you.
Thank you guys so much. You can always reach out to Karen directly. Of course, you can always reach out to me as well. You guys take care.
Bye.